Hello and welcome to Bloomberg Quint Market Wrap. It was yet another day where the bears took over the Lal Street. The Nifty index turned negative midway through, not being able to hold on to the morning gains, which were also marginal though. But the Nifty ended at 9360, losing 25 points. So again, couldn't hold that 9400 level for the second straight day. We have with us Jay Thakkar, Head of Technical and Derivatives Research at Anand Rathi. Thank you for joining us, Jay. What are the key support and resistance levels to watch for the index now?
Hi. Well, overall for this series, tomorrow being an expiry day, so I believe that on the upside now 9400 is a very crucial resistance. In this series it was initially 9200 was a very good support, and thereafter we saw index really inching towards the levels of 9500. And once it reached 95 was the resistance, and 94 was very crucial support because therein where we had seen the maximum open interest as far as the put options were concerned. But then with the break of 9400 now, and Nifty closing below that for the second consecutive day, we have seen some unwinding happening in the 9400 put options, and that positions have been shifted to 9300 put options, and that is where we've been seeing highest open interest as far as this series is concerned now. So I think more or less the expiry has to be between 9400 and 9300 levels. I think the immediate resistance is 9400 and thereafter 9450. So these are the crucial resistance on the upside. Support on the lower side directly comes at 9300 as the initial support. If that breaks, then 9200 would be the next support going forward. So I think more or less, at least for the short term, I think the overall trend is negative. Don't see a clear breakout about 9450.
It's interesting that Jay has spoken about the levels and the options open interest, which when it comes to the maximum open interest, that currently lies with the 9,300 put and the 9,400 call across all series, of course. There has been substantial unwinding in the 9,600 call. But again, Jay, when I'm looking at the rollover numbers, they are relatively lower as compared to the average of the previous 3-4 months. Is this because of the uncertainty and expectations of perhaps a little volatility going ahead? Jay, my question was to do with volatility. Are you expecting more volatility to come because we're not looking at rollovers, picking up substantially?
Absolutely. The way we have seen a correction happening in the broader markets. If you see, apart from last year, there are many other stocks that were added as well in the FNO list. With this addition, the list of FNO had gone about 200. And I think the kind of selling which we have seen coming across the broader markets in the last week or so, I think overall we would not see that much of long rollovers happening on in the June series, definitely. So and the PCR also has now reversed from 1.45 levels. The volatility earlier was quite low when it was trading at the live low. I would say around 6 to 7 years low, when we were seeing that prices were going high. PCR was increasing and volatility was decreasing. So that was a good combination when the price and the PCR moves up and VIX is heading lower. But then we have seen a reversal happening in this entire thing. Now the VIX has gone up and the PCR and the prices are falling. So this clearly indicates that there is a trend reversal in the market, and I think with this increase in volatility and with the kind of a decline and the breakdown which we have seen on charts as well, I am expecting volatility to increase from these levels as well. Yes, so I think that would also play a good role going forward in bringing down the prices in the market as far as the large caps or the Nifty is also concerned.
All right, talking about what was weighing on the index, it was metals, pharma and PSU names. But a positive surprise on JLR margins has led to a lot of analysts retaining their positive stance on Tata Motors. So that stock was the top gainer on the Nifty index, sitting with gains of about 4%. GAIL, Adani Ports, oil marketing companies like PPCL, IOCL were amongst the other top index gainers. On the other hand, it was Bank of Baroda, L&T and Bharti Infratel which were seeing weakness. Cement, pharma names also seeing some weakness. Jay, I believe you have a call on Tata Steel.
Absolutely. See, overall, as you rightly pointed out, and rightly, you summed it up as in which sector is doing well and which is not. I think yes, the oil and gas sector is trading quite negative. So I would like to provide you some sector specific views. I think telecom is still weak, pharma is weak, oil and gas is weak. We have seen some bounce back coming in IT. So apart from Infosys, in fact, TCS, Tech Mahindra, Hexagon made Mindtree, Wipro. These stocks have performed quite well in this series. So I think yes, the IT sector has done somewhat good. But metals. Even this is one sector wherein we have not seen much decline coming in. In fact, it's one of the the kind of selling which we have seen. Metal should have corrected, but they have gone sideways to positive. In fact, yes, I have a buy recommendation on Tata Steel. I think on the lower side, this stock has a good support around levels of 470. I think till those levels held, we can see a bounce coming to this stock. Let's say 500 to 510.
Okay, and yet another major earnings Q4 earnings that were out today was for Lupin. It was a clear miss. A net profit of 380 crores versus an estimate of 643 crores. That looks like a very big miss. But there are two factors that drove that kind of a bottom line miss. One is, of course, a provision that the company has made for liability towards its Australian subsidiary, at 156 crores. Plus, there was a forex loss of about 168 crores versus a gain of about 26 crores in the last year quarter. So both of them really weighing on the profit number. India growth 13.8% was a decent number. US revenue fell about 13.2% year on year, and again about 13% quarter on quarter, again which was largely expected due to increased competition in Klumetza and the base portfolio price erosion. Hence, in the aftermath of the numbers, in the immediate reaction, the stock fell to as much as 5 or 6%, but paired losses to end about 1% lower. So pharma stocks continue to show weakness for the second straight day. Jay, any thoughts on any of the pharma names, or even Lupin for that matter?
I think Lupin intraday basis saw some good recovery coming right from around say 1167, 1170 levels, and it ended up above 1200 again. But I think yes, Lupin still looks weak. It's been forming low tops and low bottom, trading well in downward sloping channel. I think on the low side, this stock has a good support around 1100 to 1120. So that's the level to watch out for going forward. And if it comes at those levels, and if we see some if that stock sustains at those levels and recovers and reverses from those levels, then yes, it would be a good buy thereafter. As of now, I think it was just some short covering on an intraday basis, because of which we saw some sharp move coming from the lower end from 1167 about 1200 levels. So I'm still not seeing any reversal or strong reversal in Lupin. So I think at 1100 or 1120, that would be a good level to watch out for.
Well, please do bear with us. We have some audio issues, but to wrap this show up right now, we have some losses with respect to Voltas, Jubilant Life, as well as Religare Enterprises. On the other hand, in terms of more weakness, Tata LC is a stock that stands out, and Videocon Industry is also declining by as much as 10%. Finally, Jay, just one question on mid caps. You do have a call on Greaves Cotton as well as Schneider Electric. If you can take us through both these calls.
Sure. See, from the medium to long term perspective, technically, what I think is there are three stocks which clearly have shown the signs of bottoming out, and one of which is Schneider Electric. I think this stock has consolidated quite a lot, and it has formed a base, triangular pattern. I think generally this kind of pattern when form at the lower levels provide a breakout on the upside going forward. I think we would see this coming in Schneider Electric. So I think on the lower side around 115 on a closing basis would be a very good support and stop loss for this stock. Hence, with that as a support or a stop loss, one can buy Schneider Electric going forward. I think this stock is quite likely to inch towards the levels of 210 initially, and once it takes off those levels, the next level to come out to around 245 to 50. So I have a buy recommendation on Schneider Electric. The second buy recommendation I have is on Greaves Cotton. It has given a breakout from a good consolidation, and that is a running triangular pattern formed on the monthly charts that's been formed in its wave 2 of the larger wave 3 on the upside. And generally, when 3 of 3 starts on the upside, it provides a good returns going forward. So I think yes, this stock has a good support at 125 to 130 range. So with that as a stop loss on a positional basis, one can buy Greaves Cotton. The target on the upside would come to around say 240-50 initially, and thereafter around 320. So these are all positional calls which I'm giving, so it will not be for 1 or 2 months, but at least for around say 6 to 12 months. The third buy recommendation which I have apart from Schneider and Greaves Cotton, would be on GTND. This stock had fallen in a downward sloping channel, provided a breakout from that, and thereafter we have seen a good impulse wave forming on the daily charts. That's the 5-wave rising structure. So I think GTND on the lower side has a good support at 310 on the closing basis. One can buy this as well. The target in the medium term would be somewhere around 440 to 460. And if it manages to take off those levels, then I think it's quite likely to inch towards the previous highs as well.
Jay, it was a pleasure speaking with you. Thank you for those calls. And as for you
Thanks.
guys, that is all that we have on the market wrap for today. Stay tuned on Bloomberg Quint, and we'll see you tomorrow.